Let's switch on.
Yeah.
Good morning. Can you hear me?
No, not yet. Oh, the bottom one.
Technology at its finest. It hasn't woken up yet.
I agree. Sure. Yeah, I'm glad you said that because I feel it too.
Okay, how's that? Much better. Good morning. It's 9:15, so we want to respect your time and get started with Fresh Start Mornings. Thank you for being here on our third Wednesday. I'm here at the circuit for our educational panel. I'm Lee Smith. I'm with the Cherokee Office of Economic Development. For those that knew Amanda Sutter, I took her place 3 weeks ago. So I'm starting week 4. So excited to have y'all here this morning. But Fresh Start Mornings is an initiative out of our Fresh Start Cherokee program event. And we create a culture of community of entrepreneurship. We want to support you, the small businesses, the startups here in our community. And we do that through the Fresh Start Mornings, the first and third Wednesdays of the month, the circuit, which you're in, which is a really amazing co-working space, and NAV, for those who are a little bit more into their business, wanting to scale up or grow. It's a mentorship program where we match you with experienced business owners or executives to help you do that with your business. And then community partners. So you all know that nothing gets done unless we bring people to the table and are able to work together. So we're very fortunate to have our city and our county, but also our space sponsors. So we have Circle of Friends who helps us with our coffee, Reformation Brewery that also helps us with our space and coffee, the circuit here, obviously, we're in this space. Gerald Griffith with Corridor Publishing is going to do the live streaming, and he's going to be the one that says, scoot over, you're not in the video, scoot over. Elizabeth Pease is going to MC in just a little bit with the Intentionals. And then we have Bronson Kurtz. He's with Polar Night IT Services. He's an IT guy, owns the company, and does photography on the side and helps us out with the photography. So he's the one that's going around with the camera. And then I'm going to turn it over to Elizabeth, who's going to introduce our speaker today. It's fun when your worlds collide. I spent the last 25 years in Cobb, so I happen to know Lisa. So I got to Cherokee, and I was like, wow, somebody I know already coming to Cherokee County to help us with Fresh Start Morning. So it's fun to see you too.
Thank you, Lee, and welcome, Lee. Everyone give her a round of applause to welcome her here to Cherokee. And it is my privilege to introduce Lisa to you. And she currently lives in that other county, but maybe we can convince her to move to this county at some point. I don't know if that's true. But Lisa is with LGE, and she's been in small business lending for about 30 years. I'm getting that thing. I move over. Okay. And there's a few other things that I learned about her is that she is a huge Braves fan, like over-the-top Braves fan. So feel free to talk baseball with her. And she is always involved in the community. She's always serving and giving back. So I think that's just a great role model for all of us. So Lisa will be sharing today about all the business basics for money and business. That's kind of cool, right? So Lisa, come on up and welcome her. And then at the end, we will do questions. Come on.
Thank you so much for having me. Yes, I'm a huge Braves fan. Until they come and ask me to replace Alex Anthopoulos as general manager, I work as a commercial lender at LGE Community Credit Union. Until that day that I get that phone call. But thank you so much for having me here today. Lee, Hannah, everyone was just great to work with. I am so excited to share some words of banking. Banking is a verb, no matter if it's a credit union or a bank. Words of wisdom with you. I've been doing this for many, many years, and we as bankers get into our banking lingo and we start talking about things and we start giving you terms and things like that that you don't necessarily know. But I wouldn't necessarily know when I come to your company what you do either. You would have to train me on that. So we're going to talk talk today about some basic lending, how it works, how it functions, how it can benefit you and your business. So we are going to get started with what is LGE. LGE is a credit union. I have been in banks that are for-profit. LGE is a non-profit institution. It means our members own LGE. We have a board, but we do not have shareholders that we have to answer to other than the members. Everything that we do, bringing in fees, bringing in interest on the loans that we make, all of that gets rolled up to our members and is distributed in better rates, better fees, and on the deposit side, better interest rates. So it's a great organization. LGE has been around for a long time. 1951, it started out as LGE Credit Union, and it was a concept for Lockheed employees to be able to bank somewhere, and that they had a hand in how it was run. It changed to LGE Community Credit Union. That stands for Lockheed Georgia Employees, so that is a tribute to that. Again, it's a member-owned full-service financial institution dedicated to the health and advancement of members' financial lives in its communities. How do you become a member of LGE? The basic of that is that you live or work in one of our member counties. The counties are listed up there. Douglas has come on recently. We may have some more here soon, so hold that thought. But you would live or work. The other alternative to that is if you have a family member that is eligible to become a member of LGE. Perhaps your grandma, your dad, your sister lives in one of our counties, and then we can make that work. Agenda. We're going to talk about some terms. We're going to talk about the Business Visa credit card, how that is a gateway to your cash management needs. Business lines of credit. The most #1 question I get is about lines of credit. Commercial real estate loans, that's kind of the thing that I've done for many, many years. SBA loans, how to prepare your application, how to be prepared to apply for a loan, and some resources. I've got some great resources for small business owners, and they are largely free, which we don't like. First of all, words to know. SBA, we throw that out there. What does it mean? U.S. Small Business Administration. It is a government program, and what they do is, let's make the math really easy. LGE does a $100,000 loan to a business. They will guarantee a portion of that loan, perhaps 80%. So they're guaranteeing $80,000. Typically, SBA loans are for businesses that have not been in operation very long, perhaps 0 to 2 years, or businesses that need more favorable terms that the SBA offers. So that is just something we throw out there. SBA.gov, very helpful to small business owners. There's lots of information out there. SBA preferred lender. You want, if it's not LGE, you want your bank or financial institution to be a preferred lender. What that means is we get an application, we don't have to send off the information to SBA, upload it to them, have them underwrite it and approve it. We can do that right within LGE. And we work with SBA to get the loan authorization that tells us how to close the loan, and then we go from there. So you want your lender to be an SBA preferred lender. 7A loans and 504 loans, both SBA-related loan programs. These are the basic ones. 7A probably is the most used loan that SBA has. Loan to value, that's when we tell customers all the time and you get the question mark over the top of their head. That is your loan amount in relation to the collateral that you are providing. In real estate, if that's real estate, you have a $100,000 piece of real estate. We're not going to be able to lend you $100,000. We're going to margin that at a loan to value. Typically, on owner-occupied property, that's 80%, so we can lend you $80,000 on that property. Term, the amount of time that you have to fully repay that loan. Is it 5 years? Is it 10? Is it 20? How many years you have to do that? Amortization. This works with the term. You can have a 5-year term on your loan, but have a 20-year amortization. Right now, our most common at LGE, our real estate program, we do a 20-year amortization with a 5 or a 10-year maturity or term. Variable rate. This is probably the second most common question that I get. That is an adjustable rate. If you've had a mortgage, you've had an option to have an adjustable rate or a fixed rate. The lines of credit and some of our loans are a variable rate. That is usually tied to prime rate. That's the one that's in the media. We are currently at 8% today, this morning, but maybe by the time I get in the car, it's probably going to be 8.25%. And then we have a rate index over that. On our lines of credit, it's typically 1% over prime rate. Prime rate goes down, your loan rate goes down. Prime rate goes up, unfortunately, your loan rate goes up. Fixed rate. This is what everybody wants right now in this rising rate environment. That is a fixed rate. Your payment is based on that, and you know exactly what you're going to pay every month. Intangible tax. This is a real estate-only tax that is paid to the county in which the property is located. It's $3 per thousand, so when you purchase real estate, it can be a big cost at closing. Because LGE is nonprofit, we don't have to collect that tax at closing. A for-profit institution does have to collect that. I did a $3.5 million loan recently. That was substantial savings for them. Secured loan and unsecured loan. Secured, obviously, it has some type of collateral. Unsecured means it does not have a specific type of collateral. The business is responsible for paying that, and any guarantors or owners. Typically, a owner that owns 20% or more of the business has to personally guarantee the loan. The Business Visa credit card. This is what LGE offers here, but the reason I have it up here is this is kind of the gateway to cash management needs of a young business. You have a Business Visa credit card. You are buying product. You are buying paying your rent on this credit card, whatever it is, waiting for your receivable of something that you sold to come in. And so you can use this card to kind of start a cash management program for the business. Business lines of credit, like I told you, the number one thing I get asked about is business lines of credit. Do I need one? How do I use it? How does it work? A business line of credit is, again, cash management. You are buying inventory for your business, and you have to pay for that today. You're selling it to your buyer, but they have terms. They're not going to pay you for 30, 45 days. You still have employees to pay. You still have to keep the lights on at your office. So all of those things mean that you've got a cash management crunch. Sales are good, but it requires cash in some way. Either you have it on deposit somewhere or you borrow it from a line of credit. You then borrow from that line of credit, and then when that business, that buyer, pays you back, you are repaying the line. Our lines of credit are generally 12 months. They are interest only. So if you borrow $5,000, your next monthly payment is only based off of $5,000. When you pay that down, the interest goes away. If it's a zero balance, you don't pay anything. Typically, they are adjustable rate or variable rate loans. So you need to understand. Commercial real estate loans. This is kind of my thing. I do all of the lending, but this is what I've done the most of in my career. Your business is growing. You need a new office. You need an office condo. You're building something, so you need an office warehouse because you've got to bring in your product. You need a commercial real estate loan. Commercial real estate loans can be very various in terms, various in amortization. You have a contract on a piece of property, you bring it to us, we underwrite it and tell you what we can offer for those terms on real estate. It is eligible for what we call conventional, which is, yes?
The terms of construction, like what are the parameters of construction for that?
Construction is done a little bit differently. You're buying the real estate typically. We're financing the real estate. You're putting in a down payment on the real estate, and then your financial institution is financing the construction. Typically, what we do is called a construction perm, which means that you have a length of time to be able to build that building, that you're paying interest only, we're doing inspections, you're building it. At the end of that, you're done, then it becomes a permanent loan.
In theory, if we are the tenant, it's a rental situation, but we're responsible for, let's hypothetically say, finishing the last part build out.
You can include that. You can include that in your construction loan. But typically, if it is a building that you are going to have tenants, the tenants and the landlord, or in this case, our borrower, would discuss who's going to be the tenant first. SBA loans. This is the hottest topic we have right now. SBA became more popular after the PPP program and the EIDL program. People began to be more aware of what SBA does after we rolled these out post-COVID. SBA lending is not what it used to be. In the 90s, we would package all these documents up, big package about this big, we would ship them down to Atlanta, and we would wait, and we would wait, and we would wait. That doesn't happen that way anymore. Number one, we're a preferred lender. Number two, SBA rules and things like that, although they are plentiful, have gotten a little bit easier to work with. SBA is an alternative for conventional financing, but it's not the last resort that it used to be. SBA on real estate can have lower down payments. It can have longer amortizations. The longest I can go at LGE is a 20-year amortization, and SBA will allow a 25-year amortization. That means your payment's a lot less. Think of a 30-year mortgage on a home versus a 15-year mortgage on a home. Your payment's going to be a lot higher. And some businesses need that. That's attractive to them. The other business that really needs SBA financing are new businesses. We require that you have at least 2 years of tax returns to be able to do conventional with an LGE. If you are a startup or in that 0 to 2 zone, SBA is going to be for you. Because again, remember, SBA is going to guarantee a portion of that loan. We never like to talk about it, but if the business goes upside down, it doesn't work. SBA is guaranteeing a portion of that. So it incentivizes LGE and all the other lenders that do it to make those loans. Flexible loan structure, again, longer amortizations, lower down payments, yes. And the SBA does allow higher loan-to-value ratios. And it's really important that we know that these programs are there for the small businesses. I encourage you to go to sba.gov. There is so much information out there. There are online tutorials on how to do things. They have a SCORE mentoring program that is also free, located all over the state of Georgia.
If we've been approved for an SBA loan in the past 6 months, but we didn't look at the LGE aspect of it, can y'all pull that up as if it's within that amount of time, it's to look if the qualifications are okay and everything?
If it was with another lender?
Well, I just did it through the SBA, so it fired off the ones I qualified for, essentially. And I don't remember seeing an LGE one in there. Could we pull up that application, I guess, for lack of a better word?
In LGE, the way we do commercial lending is that you actually apply directly to a commercial lender. So if it was on a site somewhere, we probably are not on there. It would be on there that we are a preferred lender. But I'll go over that in just a minute. A4, owner operated. If you buy a piece of real estate, the owner has to occupy at least 51% of the property. So if that's square footage, 51% of the square footage can be owner, 49% can be tenant. A for-profit business organized as a sole proprietorship, corporation, or professional partnership. I could talk all day long on entities, what they mean, how they work. Generally, what it means is you have a business operating under either an LLC, an INC, a partnership, etc. But it's not really going to change that much when you apply for the loan. The business is going to be the borrower. The owners are going to be guarantors. So unless it is in a personal name, your business in the personal name is going to be structured pretty much the same way. LLCs have a certain amount of liability, things to keep the owners out of a lot of liability, and also different tax consequences. I am not a tax professional, but most of the businesses, especially the ones I closed today, are in the name of an LLC with the owner. Unable to secure other credit under reasonable terms. That generally comes in when it's a young business, that there are not terms out there for you that are reasonable. Application preparation. Okay, these are the things that you can do to make it easier on yourself when you are ready to apply for a loan. What we require. Lenders like to have 3 years of tax returns to look at your loan. Again, we can do 2, but prefer 3. Most lenders prefer the personal guarantee of the owners. Anyone who owns 20% or more of the business will need to personally guarantee that loan. Again, if your company has been in business less than 2 years, that's going to be a little bit different for you. I'm going to give you a slide at the end on the Small Business Development Center that's located at Kennesaw State University. Chattahoochee Tech probably has one as well, but it is kind of a business incubator. They will help you prepare projections for your company. They will help you prepare the business plan. They will talk to you about marketing and human resources and all of those things that businesses need. And the good thing is it's generally free. They have some classes, I think, that are $29. Find a business lender. Let's say you don't need a business loan today, but you think potentially you might need one. Go ahead and meet with a business banker at your financial institution. Get to know them, talk about your business, tell them what path you're on, talk about what your growth goals are for the next 5 years. That person then becomes an ally in your corner. They'll have great ideas for you. They'll have things that their particular financial institution likes to see. But go ahead and partner. We also learned during the PPP program and the EIDL program, it helps to have a contact in that field even well before you need it. I think I did go backwards in error. We can go back one. I jumped over that. Okay, researching the application process. LGE has our business application right on the website. So you can go find that at lgeccu.org/businessloans. That'll give you an idea of what the financial institution you are working with is going to look for in this application. Ask questions. Connect with this lender. Talk to them. Ask questions. Is this right for me? Educate yourself on SBA. Again, SBA.gov. See if that's right for you. Go ahead and educate yourself on that program. Resources. This is what I was talking to you about with the SBDC. They came and did a presentation to our commercial lending group recently, and they offer so many things, and they are paid through grants from the state of Georgia, from the counties, from the schools, and so it is very inexpensive to have one of these folks in your corner. They will talk to you at first. You will talk to someone, and they'll decide who you need to go to within the organization. And if you're a young business, you go here. If you're an older business that's maturing, expanding, they talk to a lot of businesses that want to expand. And they have just fresh ideas, great ideas for business owners. It is located at KSU. There are other schools that offer this within the state of Georgia. And then with LGE, this is my email. I have business cards in the back. Marcus Porch at Town Lake, that is his email. We've got Jordan Hames right here. He is at the Woodstock office. I promise you there's an LGE office convenient for you. Ashley, she was here earlier in business development. If you are interested in applying for a loan, not just questions, you can email me, call me with any questions that you have. You will email businessloans@lgeccu.org or call that phone number. There are other commercial lenders within LGE. I'm not the only one. So if you send your email into that, you could be assigned to another lender. Jason Albritton is my counterpart, and we are looking for another lender currently. So that's all I have, and I am ready for questions. What questions do you have?
Can I use this mic for the people?
Yes.
Okay. Let me get a microphone for you. I just wanted to be able to be recorded on.
I have a question about a mortgage. So our escrow keeps going up. I don't know if that's because the property values are going up. And the second part is, should you pay the difference up front? Because when I roll it into the mortgage, my payment keeps going up.
On a residential mortgage where you have escrow, I am not in the mortgage department, but I do know the answer to that question. It is totally up to you whether you want to go ahead and pay that number or have it amortized over the next year. But you are right. Your mortgage payment is going up because your taxes are going up, because your values are going up. The house that somebody bought 5 years ago for $250,000 could be a $600,000 house now. So when that happens, that affects the tax register. That value goes up, and then you're paying more. Insurance is another thing, and I can talk about that because we do insurance, obviously, on our commercial mortgages as well. Insurance for a short time post-COVID went way down because there was fewer claims, definitely auto, but also mortgage claims and things happening. People weren't moving as much. But they have gotten to a point that they're going up. Again, values are going up. Whenever you're look at your declaration page on your mortgage, it's going to show you that value as a replacement cost. What's happened over the last few years? Lumber's gone up, concrete's gone up, everything has gone up. So to be able to, heaven forbid, a tornado happens and it levels your house, to rebuild that number is going up. We do have LGE Insurance Services that offers all of those products within LGE, auto, home, commercial. Jordan, you probably know more than that. They do everything. Really easy to work with as well. But yes, it's all going up, and your escrow is going up because it's a good thing.
Yeah.
If you needed to sell it, but you need to insure it and you need to pay taxes.
Sorry, I know that's my business.
Yeah.
I think we've all kind of had the same thoughts sometimes too. So
Yes.
Just one question. Elizabeth, she called on me.
Tyler, bring it. You guys take it over.
Tyler's been talking the whole time.
Yeah, exactly. So just ask questions as I think of them.
These guys' questions.
We're very concerned.
Mine's kind of basic. So right now, when I want to get a loan, I have to personally guarantee even the business loans. At what point do I not have to guarantee business loans, and the business can just guarantee it itself?
That is a good question. I have worked at large institutions, as large as SunTrust, as large as Synovus, you would have to get into what we call the corporate banking world, and a company where you don't have a majority shareholder. So you're talking large corporations and things like that. I have done, let's see, probably the largest loan I've ever done is probably $13.5 million, and it still needed a personal guarantee. So that gets up into the huge corporate world where, you know, you've got a 5% owner or something like that, but you don't have that majority owner. The guarantor's ownership is because it's a large corporation.
I'm honored to follow that. My question is in regards to the length of time. So from the start of the process of application to having access to the funds of the loan, what roughly time-wise are we looking at everything?
That's a great question, and I probably should have covered that in my presentation. It depends on the type of the loan. If you are talking a real estate loan right now,
For us specifically.
oh, 7 days, I would say 60 days.
Okay.
One of the reasons is the appraisal process. If you're doing a real estate loan and it is a 7A, we get bids from appraisers that sometimes it ends up being a 5-week turnaround time. We've gotten some good ones recently that's been more in the 20 to 21 business days, but it depends on that process. Closing an SBA loan, generally I like to say at least 2 weeks, because we can do a conventional loan in about 45 days because of the documentation. And you need somebody that's really strong on getting things in, and I'll send a needs list out and say I need this list of 10 things and get it back to you. Insurance, if you're building permits, a whole list of things that you would actually need. But SBA 7A, I would say comfortably 60. If it's a line of credit or a equipment loan or something like that, you're talking maybe 2 weeks.
Perfect. Okay,
Yeah.
Okay, so if I were looking to get a small business loan, but previously I've been like a stay-at-home mom and I'm the only owner of the business, how would that work when you're saying that someone needs to personally guarantee the business? There's no like.
Has the business been in business for less than 2 years?
Correct.
Okay. Generally, in the less than 2-year number, it goes with the individual. The business Visa credit card is a good example of that. Those are generally approved based on your personal credit as the guarantor. If it was less than 2 years and it was over the amount for a business Visa credit card, Jordan, those go up to 25,000. So if it's more than that and a line of credit and it's less than 2 years, it would still probably go on that. We would ask for your projections to see where you think you're going to be in the next 2 to 3 years and look at it overall, but it's not a general answer of a yes or a no. Yeah, sorry.
What is a good credit score for somebody who, like what Ashley is talking about?
We have a minimum credit score of 680, and those are generally those ones that are smaller. We don't have an absolute though, because when you're looking at real estate, you're also taking the business into account. You're also taking into their cash flow, other factors. So even if it was below 680, that's probably not necessarily an absolute no. I say all the time that commercial lending and business lending is not black and white. We play with a lot of grays because everyone is different. I've been doing this for 30 years and I cannot tell you one that came to me and it was the exact same as something else that I've done before, because you guys are creative, you've got your business and it's different and it's special. So there's a lot of times that we do an entire credit memo write-up that gives your story. That's actually my favorite part of what I do, is hearing your story. Where are you going? What is your idea? How does your company operate? what inspired you to do this? So there's an entire credit memo write-up with a commercial loan that gives the story of the business and where you are and where you're going and how this will benefit your business.
So let's say I want to buy this property, and you may have said this, and I may not have been listening because I'm distracted. So let's say I want to buy a property for $500,000, but I can't afford the monthly payment on that property because it's an investment property and they're more strict. Is that right? If I were to secure, let's say, tenants, and they'll have like 3-year contracts, and there's like 3 of them, does that monthly recurring revenue from my tenants help with getting a loan to buy a property if I get them ahead of time?
Absolutely. We do as LGE investor property. Not all financial institutions do investor property. And you can count the rent from your tenants in your cash flow. One thing that we require, I can't speak to all banks or financial institutions, but we want the property to cash flow itself. So we want that property from the tenants, from the owner, however that is, or the business that's in it, we want it to be able to cash flow itself. And we ask for a cushion. This is pretty tried and true. Most financial institutions want that debt service coverage to be 1.25 times. That means if the payment is $1,000, we like to see that you have at least $1,250 a month to be able to cover that as a cushion. Because there's a lot of things that goes into owning a building that is not just that payment. The insurance, the taxes, the maintenance, all of those things that go into that.
Let's say, like, what if I'm 5x of my revenue? Could I put less down if any way get past the 20% down for investment?
The down payment is pretty finite. You have to put that down no matter what. But if you have 5 times debt service coverage, I don't even want to talk to you. That sounds like a perfect world.
I'm just making the math work. Like, what would be?
Make the math easy.
If I could shift the debt around, could I not be 20%?
Yes.
Higher.
Yes. Yes. No. The down payment requirement is a loan policy requirement and a regulatory requirement. We are governed by NCUA. That is the sister or the brother, if you want to call it, of FDIC. And there are regulations that things we can and cannot do, and we cannot do a real estate loan without a down payment based on a policy. That minimum is 20% down. SBA, that minimum is 10% down. That's one of the reasons SBA loans can be a good fit.
I know you can't speak for all financial institutions right now, but based on where the market is at and 2 banks having failed within the last 30, 35 days, one of them being picked up by Chase, could you offer some perspective on that and what's going on in the market and what makes LGE so different as a member-owned institution?
Absolutely. We have been watching that as everyone else has been watching that. What happened in California was so different than the way we operate, it's almost like not even to compare apples to apples. They're making the Silicon Valley businesses, they have businesses with millions and millions of dollars in deposit. The difference is what LGE is number one, it's local. Number 2, we have deposits from thousands and thousands and thousands of individuals. We have business deposits, but I don't know that we have anything that would mean that we have a concentration and a type of business that would be a problem. I probably need to let the executive management talk to how the structure of LGE is, but it's not anywhere the same. What happened there was a run, everybody's seen It's a Wonderful Life. What happened there was a run on those deposits, and they did not have enough deposits to cover that. They had put some deposits. Most financial institutions take the deposits and put them in their own loans. They have put them in investments, long-term investments at really low rates, and then what happened? The interest rates were flying up quicker than we've ever seen before. And so when they came in, they were having to cash out those investments to be able to cover those depositors that are coming in wanting money. LGE does make investments, but they make very sound investments. We put all of that money in our loans. We have a huge mortgage division. We do auto loans. We have great rates on auto loans. I was actually talking to somebody, and that's not something I do, but I actually pulled them up on the LGE website the other day, and we were beating some auto loan rates by 3%. So we put that back into the products that our members want. But as far as what we keep on deposit, I can't really speak to that. But we are, Jordan helped me on this, the 9th most healthy credit union in the United States. How did that article cover it? Yeah, so I mean, we're consistently reviewed by the regulators, our NCUA regulators. They're very happy with us and how we are structured and what we do in relation to those deposits. You can find the annual report on the website as well, which goes into some of that.
Thank you guys for the questions. Thank you, Lisa. Give her a round of applause. I know we're going to take this. First of all, I love the advice regarding building a relationship before you need the help. So everyone make sure you know Jordan, make sure you know Lisa, Ashley, Marcus. Just create those relationships first, because it will make the process when you're stressed or when you have this huge opportunity in front of you, you might as well just have that relationship already pre-built. How many people know what SCORE is? Lisa mentioned that. It's a service corps of retired executives. And many moons ago, I actually had the opportunity to sit down with somebody from SCORE. And he was the kindest man who would ask really direct questions. And I'd be like walking out like, wow, I never thought of that. So just that's a great resource, and it's people who want to give back. And then the other thing is one of our NAV mentors is actually part of the entrepreneurship program at Kennesaw, and that's Colin Ake. And he is always available for hard truth conversations. So be ready. That's all I'm going to tell you. So we have so many resources here, and I just hope that you guys all take advantage of all those. And I'm going to ask that Lee come up and just talk about what is next for Fresh Start Charity.
Thank you so much. Thank you, Elizabeth. Thank you, Lisa, for wonderful words of wisdom about loans. When you can't sleep at night, look up SBA.gov and you'll get good sleep. So Elizabeth mentioned next up for Fresh Start Mornings. At the top of the meeting, I mentioned we do it the first and third Wednesday of the month. So the next one will be May 17th, and we'll be at Reformation Brewery in Canton. So we try to do 2 different locations, and we're going to have the holler. So Jeff Hagedorn will be presenting his business. So sometimes you'll see an educational panel like we did today, and then sometimes we'll have a business that will present, one so you can learn about them, but they also pose 3 or 4 questions to where they're having really tough challenges. And we do like a crowdsourcing where we open it up to the audience, and they help answer those tough questions. We give a little tough love in some of those answers. And then connect. We're all about connecting here at CoEd. We want to support you as a startup and a small business, but we can't do it by ourselves with our small team of 8 people. We need the community to rally around us and help us get the word out. So if you're on Twitter, Instagram, Facebook, LinkedIn, please connect with us and please share it with others and ask them to follow us. And for more information, you can always go to CherokeeGeorgia.org, FreshStartMorningsCherokee.com. If you have a business that you would like to present at one of our Wednesday mornings, please reach out to our office. Please ask for me. I'm happy to help connect you and talk to you about more details. If you know of a business in the community that you think would be a good fit for Fresh Start, or if you know somebody in the community that you think would be a good attendee, we'd love to see this room full. So the more people that spread the word, the more attendance we will have and the more impact we can have with our small businesses here in the community. So with that, I'm going to turn it over to our team. Just anybody from CoEd want to say a few things before I wrap it up? They all shake their head and say no. And it is almost 10 o'clock on the dot, so we're going to release you so you can get
through your day. So thank y'all for coming.